Hello, and welcome back to How About That Crypto. You are watching your daily crypto news and updates with your host, Bitcoin Stylist on Twitter and Bitcoin Hairstylist on Instagram. I'm here Monday and through Friday, and I explain crypto and Web3 while keeping you up to date on all the latest. Today's news stories are the UK is opening up to crypto and even issuing their own NFT. Crypto exchange Voyager Digital is the latest victim to get hit with the cease and desist order regarding their interest-bearing accounts. And U.S. lawmakers propose another bill to regulate stablecoins. What does all this mean? Not to worry, I'll explain it all. But first, if you like the content or you don't like the content, please let me know by leaving a comment below. If you're listening on podcast, please give me 5 stars and follow me. If you're watching on YouTube, please smash that subscribe button, ring the bell. It helps support the channel and it doesn't cost you anything. Just to be clear and litigious, this is not financial advice. This is for entertainment purposes only. You can use the links below to do your own research. And my prayers continue to go out with all the people that are affected by the Ukrainian conflict. And hopefully this war is over sooner than later. And I have an announcement for everybody anybody who listens to this. If you're first time listening or second time listening and you feel like you can't follow it or it's too confusing, just keep listening. I do these videos to layer on top of each other. I'll explain the news, but I'll explain the concepts that you need to understand the context. And so anyway, if you have any issues understanding, please leave a comment below. I want to hear from you. Please don't just switch the channel. I would like to make sure that I'm addressing and being able to communicate well with everybody. You can also private message me on Twitter at Bitcoin Stylist is my handle, and there's a link in the description below. So the United Kingdom is getting into crypto. Let's check this out. All right. So if you're listening on podcast, I just pulled up the first link in the description below. And author Lucy Harley McCowan reports for the block. U.S. Treasury outline plans to regulate stablecoins and issue an NFT. I just want to read something from here. The UK's Chancellor Rishi Sunak set out plans on Monday to regulate stablecoins and issue an NFT as part of a bid to position the UK as a crypto-friendly tech hub. So the UK wants to see stablecoins, and they want to see them issued and used as a payment, and they want it regulated. I'm assuming this means they want to be able to trace it as good as they can, if not better than their current. Sorry, I'm going to start over. I am assuming this means they want to be able to trace it as good as, if not better than, their current currency. So we talked a little bit about last week how the European Union created a rule, and it's going to cause the crypto industry for Europeans to be exactly like the current banking system. And so this is basically with like connecting your identity to every single transaction that you make. This will help ensure taxes are paid and illicit transactions are monitored. This also means that you should be aware that all transactions will be monitored, even buying a stick of gum. The theory is once all this stuff is regulated, assuming the regulations do not strangle innovation, adoption should soar. I agree with this theory. No, I do not like what governments and corporations will do with the data they will be able to collect. And for those of you who think there is already so much data about you, what's the difference? This amount of data is unprecedented. It is not the same. If you would like to know more about that, please leave a comment below. I'm not going to spend a ton of time on this. I've talked about this in the past. But to the point that some people have made, maybe people don't care about that stuff. Either way, I do believe that adoption will soar once regulations come in and let businesses and individuals know crypto is safe now. That's going to cause the prices to go up. Not financial advice, not guaranteed. That is my underlying thesis. So this news is very bullish for crypto, in my opinion. The most interesting thing of this story is that Chancellor Rishi Sunak has asked the Royal Mint to issue an NFT. The Royal Mint is explained in this article as, it says down here, the Royal Mint is a government-owned mint that produces coins for the United Kingdom. In an emailed statement, it said it would share further details in due course. So, and then And then I want to just read these two paragraphs also. Through its official Twitter account, the Treasury said the move highlights the forward-looking approach we are determined to take towards crypto assets in the UK. The tweet also said it would be issued by the summer. That's pretty dope. And alongside these regulations, the Treasury will introduce a financial market infrastructure sandbox to enable firms to experiment and innovate and explore ways of enhancing the competitiveness of the UK tax system to encourage further development of the crypto asset market. This sounds amazing to me. What do you think about this? I think that this is massive. Please leave a comment below. I want to hear from you. You know, an NFT, the Royal Mint issuing an NFT, that could, I mean, they could basically issue NFTs as bonds, and bonds could be traded, like government bonds could be traded at lightning speed and be way more efficiently used, and they could probably get a lot of liquidity, especially if they're first in the space, because, you know, people in the crypto world, things move so fast and everyone wants to get their hands on something. So anyway, just a thought. What do you think? Leave a comment below, and moving on. All right. Author Philip Lagerkrantzer and Yuki Yang report for Yahoo Finance. Voyager Digital falls on cease and desist orders from states. So I spoke to you about BlockFi in the past, and BlockFi is another crypto exchange, and they were more like a savings and loan. Their best thing about them I liked was their interest bearing accounts. Oh, excuse me. Well, BlockFi paid like 8 to 9% on USDC, which is a dollar pegged stablecoin, and they also paid like 4% on Bitcoin and 3.5% on Ethereum and some other coins. Not that many, just a few others. And they were using they were paying interest because they were giving out loans. So the SEC came along, the state SECs, basically the state's Securities and Exchange Commissions, as well as the federal Securities and Exchange Commission, came out and said, yo, that's the same thing as that's in a security, that's an investment contract. That is the same thing as anybody offering like a what is it called, a savings account, like an interest bearing account. So you have to regulate that. So BlockFi ended up paying $100 million fine and grandfathered everybody in, such as yours truly. I had some money in these accounts, so I'm able to continue to make interest. Those interest accounts continue to multiply, so the interest is reinvested into the account. So that's awesome. So that can continue to grow as in compound interest. And so anyway, I talked about this, and I want to read something for you to help you understand what's going on. It says Voyager, this is from this article, Voyager pools the cryptocurrencies deposited by such clients to fund its income generating activities and investments in other digital asset trading platforms, the Bureau of Securities said. I think this is New Jersey. The Voyager Earn program accounts are not registered with the Bureau or any other securities regulatory authority, nor are they otherwise exempt from registration. The lack of regulatory oversight adds a layer of risk and makes it all the more important for individuals to do their homework and fully understand the offerings before investing in them. So basically, they're saying that you're offering to pay interest without properly going through all the proper channels that anybody that puts money into the account needs to know, like certain disclosures, what the risks are. So they're saying that you can't properly do your own research to discover what are the risks specifically with using Voyager. Remember, Voyager is just another exchange like Coinbase or crypto.com or Kraken or BlockFi. And if you've been paying attention to my channel, I said this was going to happen. So basically, you can hold your money on a crypto exchange, but if they're paying you interest, then why are they paying you interest? How are they using that money? What are they doing with the money? Are they making money off of you? And that's why they're giving you money. Because like, some of these programs are staking into the protocols for proof of stake consensus protocols, such as Cardano or like Ethereum. Ethereum is going to proof of stake, and you can lock up your money into the Ethereum protocols during this process of transitioning. And once it's unlocked, you can keep it there and continue to earn rewards. You earn rewards because you're providing a staking pool, and that helps with securing the protocol, securing the network, and processing transactions. So imagine basically you're like that little machine at the grocery store where you swipe your credit card that picks up a fee, or like credit card company that takes a fee for processing transactions. Well, you get a piece of that transaction money essentially. So the SEC and the local Bureau of Securities are saying that all needs to be explicitly explained. People shouldn't just be able to put money in there without having some sort of information given to them. So if you've been paying attention to my channel, I said this is happening all over. I was able to lock up some capital in Voyager, making over 8% on USDC, which is the stablecoin in good standing with the government as far as we know anyways. They're pegged to the US dollar. I trust personally is sufficiently stable, not financial advice. Do your own research. Considering inflation, I wanted to get some loot in there to fight back against that inflation. I also like having dry powder. Dry powder is basically you, at any point in time, if the market takes a big dip, you want capital on hand to buy that dip, if that's your investment strategy, not investment advice. But that's just the concept I'm explaining to you. So having money already in the system, I don't have to get into the bank, transfer it into my account, and then whatever, and then worry about it. I can respond quickly. So I got that money. It's currently locked up in BlockFi, which means I can't move it, because once you move it out of the account, you can't put it back in until BlockFi goes through the registration process, and there's no guarantee that it will get approved. So the next to fall, I think, will be Gemini. Gemini is another crypto exchange. They still pay over 8% on USDC. So if I can find some extra capital, or I might even sell some underperforming crypto, and if I do that, that's where I would put it. That way I can just continue to earn guaranteed interest on my crypto. So what do you think about this? Please leave a comment below. Are you using any of their interest-bearing accounts? If you are not, please tell me why. I would be curious to hear from you. If you are and you're using one of a different place other than what I've named, please tell me what it is. I'd like to share that with everybody else. Okay, moving on. Our last story of the day. Author Nikhilesh D reports for CoinDesk, top U.S. lawmaker proposes sweeping stablecoin regulation framework. I want to read just a few paragraphs here. A leading member of the Senate Banking Committee introduced a bill Wednesday to create a three-pronged regulatory framework for stablecoin issuers. I think this was last week. Let's see. No, this just happened. All right. And that's why I'm reporting on it. Okay, a leading member of the Senate Banking Committee introduced a bill Wednesday to create a three-pronged regulatory framework for stablecoin issuers in the U.S. Senator Pat Toomey, a Republican from Pennsylvania, the ranking member of the committee, which is a bipartisan committee, announced the Stablecoin Transparency of Reserve and Uniform Safe Transactions Act 2022, dubbed the Stablecoin Trust Act for short, as part of an effort to specify how the U.S.'s different regulatory agencies could approach companies using cryptocurrencies whose prices are pegged to the U.S. dollar or other assets. I just spoke about USDC being a stablecoin that I personally trust, and they are trying to actually get a bank charter, which would be even more stringent than any of these other rules. As written, the discussion draft of the bill would define a payment stablecoin, authorize the Office of the Comptroller of the Currency, or OCC, to create a new license specific to stablecoin issuers, allow insured depository banks to issue payment stablecoins, and address state regulatory oversight of this segment of the crypto industry. So what do you think all this means? Basically, it means that going back to what I said in the UK, they want to get some regulatory framework around it to let people know it's safe and go ahead and start using it so adoption can roll in. They want to do this. They want to be ahead of the curve. There are members in Congress that are trying to also do that with the US, get us ahead of the curve by getting some sort of regulatory framework, which will allow businesses and people to feel like it's safe to get in because they're not going to get slapped with any fines. They also is say like, hey, a lot of people say if the government trusts it and the government says it's okay, then it must be safe. So what this is going, I think that's what this is going to do. I think this is massive. I think that this is super important. And there's a lot of questions about whether or not that this will get through. Probably not until after the midterms. Senator Toomey has been very outspoken in a lot of these hearings, and he has been a friend to the crypto community. Supposedly he is retiring. I guess he won't be going for re-election, or he's just going to step down. But that's the word on the street, is that he is retiring at the end of the year. So I don't know where this is stand, but the good news is these conversations are happening. Bills are being introduced, and they are there to not strangle it, not block it, not ban it, just to give regulatory framework to give people confidence in investing in this space. So what do you think about that? That's the news for today. I'd love to hear from you. Please leave a comment below. And if you're listening on podcast, please give me 5 stars and follow. If you're watching on YouTube, please hit that subscribe button, ring the bell. It helps support the channel. It doesn't cost you anything, and I greatly appreciate it. I look forward to hearing from you, and I will have a good weekend, and I'll see you all next week. Oh, wait, I forgot. This Sunday, I have an accountant is coming on to talk about crypto and taxes. Since it's tax season, you don't want to miss this. So tune in on Sunday. Okay, until then, I'll see you all tomorrow. See y'all. Hodl on.